Alright, what is good everyone? We're back with another video of another Forex tips video. I'm going to make it short and sweet. Today is about candle closure types and candlesticks, and basically what we can use, how we can use these closures, different types of closures, to help us in terms of confluences to decide maybe whether we want to take that buy or sell at the support or resistance. But yeah, so we're going to go through these candles from left to right, and we're going to discuss what these mean and how they can sort of indicate what's going to happen next. Firstly, we have a bearish, heavy bearish closure. That means we opened up here and we closed all the way down here. This indicates that obviously there's a lot of bearish volume in the chart, especially if this is on a higher time frame and we get a closure below a range like that. It can indicate the next candles are going to come down and clean this range to come and fill the next. So a heavy bearish candle closure coming down below a support is obviously a very good sign that you're going to come down. Next, we've got a small bearish candle. So this is indicating that in this case it looks like we're losing a bit of bearish momentum, because we've had this big candle and then now we're getting smaller, which means like the fuel to come down is running out, and that can only mean one thing. If we're running out of bearish volume, which means that we could be getting some bullish volume coming. So if we then next print a doji candle, I like to call this an indecision candle or a nothing candle, because it can break the lows and the highs at any time of this, and it's sort of, this is where the battle happens between the bullish momentum and the bearish momentum. So it's deciding where to go. If you see a support, for example, here, and then you clean the range and you made a smaller bearish candle, which means you're losing fuel, and then you get a doji candle, means you're losing even more fuel, and it's battling now. It's becoming even to decide where to go up or to go down. If then we print a small bullish candle, it looks like we are slowly gaining bullish momentum, right? So we've created a support, we've died down in terms of the bearish volume, and now we're starting to pick up in terms of the bullish volume. Now this is candle obviously opened up here and closed up here, so this indicates that the bullish volume is coming in. This is then confirmed by a heavy bullish candle. So a heavy bullish candle obviously is the opposite of this one. It shows that we've got a lot of bullish momentum coming up and opening down here, closing all the way up here. If you see this happen at a support or obviously opposite if it happens at a resistance, it indicates that your next couple of candles will drive and clean this range, because obviously we've died down from this momentum, we've gone indecision, and then we've picked up in the bullish momentum to drive and clean the move we just created down or up, if that makes sense. So now in this scenario, you could probably wait for a bottom wick on the next candle and enter a buy at the break of this previous candle high, especially if it's above maybe a small resistance on the left or something, because this will then indicate that we've picked up this bullish volume, we're breaking the high, and we've got a very high probability of cleaning the next range, and that's where you can take your position. Obviously in this scenario it'd be taking a position to go up, but if it was the opposite, then you can take that position to come down if obviously these candles were switched around. So now we're going to take a look at this on the chart and find an example where this happened. Yeah, I marked it out here. So right here, perfect example of the opposite thing happening. So us coming up with high volume and then dying down, and then we're gaining bearish momentum. So right here you can see an extremely heavy bullish candle right here, pushing up, cleaning the range, and now we can see that the candles are getting smaller. Look at the candles, the bullish candles are getting smaller, doji candle smaller, rejection, and then we close very small bullish, and then look what happened next. We closed bearish, right? Small bearish, more heavy bearish, and now this break of this low can indicate that we're getting ready to come down and clean this range, right? This range that we made here, to basically counter this range. And you can see what happened. So we broke this low, We respected this, we didn't come and break this, and now look what happened. It literally had enough bearish momentum to continue driving all the way down here, right? So all the way down from here to here, because we've created all this bullish volume, and then we've had this bullish, smaller rejection, bearish, and we just continued down ever since then to clean that. Yeah, so that was an example for you guys to see on how sort of you can use candle closures. They're actually more important than you think in terms of seeing and understanding where price is along with your strategy. I'm not saying say if you see a smaller bearish candle, then take the buy straight away. I'm not saying that. I'm saying use it as a complement for your strategy, but especially for price action, this is something that I found very useful in seeing as we approach resistances and supports, and it can help you increase your win rate. So I hope you guys enjoyed this video. If you did enjoy the video, obviously you know the deal: like button, subscribe, put notifications on, follow me on Instagram at Hasmuli. Yeah, so I'll see you lot in the next video. I'm going to keep making videos like this because people have said that it's quite helpful. So I appreciate you guys, and I'll see you in the next clip.